This is Amanda Razani with Digital CxO, and I'm excited to be here today with Shane Berry. He is the head of customer experience at Mission Lane. How are you doing today?
I am great. Thank you for having me.
Wonderful. Can you give a little bit about your background and then explain what Mission Lane does?
Absolutely. I am Shane Berry. I'm the head of digital customer experience at Mission Lane, and that's design, research, content, and marketing. And I personally joined Mission Lane way back at the start. Mission Lane is a purpose-driven fintech startup that's really focused on providing credit options for underserved Americans. And that's like the nearly half of Americans who really, since the financial crisis in 2008, have largely been left behind, kind of ignored by bigger banks and institutions. They really don't have great credit options everywhere, and they may not have access to liquidity in an emergency. It's a really big group of consumers who are kind of really defined by the market itself and the access and options they have available, rather than sort of a defining set of characteristics that really sort of defined by what they have available to them. And so Mission Lane serves those folks by developing an ecosystem of products that meets them where they are on their journey and really prioritizes their progress towards where they want to be, really building paths for improvement in their financial lives in an affirmative kind of experience. I won't dwell on my backstory too long, but I myself wasn't really raised in affluence. I had a single mom who worked really hard for my sister and me, but money was real scarce when we were growing up. And I spent my early adulthood working service jobs and making sort of regrettable and sometimes unavoidable financial decisions. So I really resonate with the folks that we serve. You know, I spent most of my middle adulthood recovering from the same kind of financial struggles that many of our customers do. It's not an uncommon experience in America, obviously, and it really gives me sort of tremendous drive to kind of help those folks navigate it.
Thanks for sharing. So when it comes to the financial and banking industry, how important is the online and mobile customer experience?
Oh, good question. I will acknowledge my bias here as a digital experience professional. But I think that question really there's sort of two parts to it in my mind. One is how important is it for the business, right? Spoiler, it's extremely important for the business. It's really the vast majority of our customers really come to us on digital platforms. They apply for our products on the website. They manage their account in our mobile app and our mobile web. It's really the focal point for all of our customers' feelings towards us. It's a storefront, a teller. It's really the personification of the company. And so it's critical for us in the industry to not only view it as a channel for performing a discrete set of tasks, but really it's the product itself, or it's a product for all intents and purposes. And so it's critically important for the business. And the other thing I think about is how important is it for the customers, right? For the customers, it's important for all the same reasons, but with totally different goals. A customer wants to feel that they're in control and they're making the right decisions, especially when it comes to their money, which is an extremely personal thing. So digital surfaces, the online and the mobile customer experience are really, they can be really fantastic at giving customers that sense of control. Often better than live interaction with real people, right? Real agents or tellers. But they can also be really, really bad at it, right? Digital surfaces can be really terrible at making customers feel in control, especially when they don't take customer expectations into account. And that, of course, leads to a pretty nasty downward spiral of customer sentiment where value can be lost on both sides.
Absolutely. So when it comes to digital transformation of the financial industry, efficiency and automation are some key elements. What is the relationship between automation and customer preferences in the context of fintech?
Yeah, wow. That's a pretty big question. And again, this is another one where I kind of think about it in two ways. In finance and banking, automation kind of takes a bunch of different forms, right? In the back office, it really shows up in fraud, automated fraud processing, Underwriting is a big one. Extending credit, knowing who to extend credit to, and then sort of administrative tasks. And these are almost universally positive applications of automation, especially when they're applied diligently, right? And they keep costs down, they prevent errors, they really increase leverage, which is what technology is all about, right? It's about providing ourselves kind of superhuman ability to do things. So in that case, there's nothing really particularly controversial about automation in those applications. I think for the consumer, though, this is the other side of it. They sort of show up in different ways, in automated tooling, often in parts of the digital product that's actually consumer facing. Things like budgeting tools, or financial planning, or algorithmic savings. Customer service, right? Obviously that's a big topic these days, the use of chatbots in customer service. But they even show up in really simpler, more tried and true things that a lot of us take for granted, like automatic credit card payments and automatic bill payments. And so, the relationship between those is really pretty fraught. It's really about understanding the value kind of on a deep level to customers, and sort of threading the needle on the value for the business and the customer.
We think the more automation options and ease, the better. But what are some areas that financial institutions need to consider more carefully first in order to determine if the service is actually beneficial or could be potentially harmful?
That's another really good question here. So I guess first and foremost, it's about, I kind of touched on this a little bit earlier. It's about customers maintaining a sense of control, right? If automation or an automated process or service, if it narrows a customer's choice or an understanding for them about what's happening with their money, that's a path that leads to, or can lead to really bad outcomes for customers and thus the business. So for the automated payments, which I sort of touched on earlier, one of the ways you can kind of manage beneficiality for customers is really maintaining their sense of control in dimensions like ability to shift their due date so they match up better with their income, and they sort of fit that puzzle of all the different due dates and income that many of our customers sort of are navigating. Or it's a separate account for bills so that some bills come out of certain different accounts, or just a separated system for them to track that way. It's seeing everything in one place. Those are the sort of ways that we can kind of, I think about the beneficiality and layer in a sense of control over the top of the automation.
So in knowing that some services such as automated payments might not always be ideal, are there any banks that provide some sort of useful walkthrough or videos to help aid customers in selecting the right services so they don't end up unhappy?
It's a good question. It's automated walkthroughs are definitely one solution to the problem of giving customers context. We at Mission Lane, and what I sort of find to be a more effective approach is a little bit of the things that I touched on earlier. It really is maintaining control throughout the process. Automated walkthroughs, can be great if they're in context. Let me pause here and start that one over, if that's okay. I wonder if depending on how we want to edit this, do you want to ask the question again, or was there enough pause there that I should just go ahead and start answering it again?
There's enough pause there. We could start answering it again, or I can re-ask the question. It's up to you.
All right. I'll just do that. I'll just answer it again. Let's see. So actually, why don't you go ahead and ask the question again, if you wouldn't mind?
So in understanding that certain things like automated payments might not always be ideal for individuals, are there any banks that provide some sort of useful walkthrough or videos to help aid customers in selecting the right services so they don't end up unhappy?
That's a great question. I am not aware of any, automated walkthroughs being the solution to this particular conundrum, as much as I am aware of the approach that, sort of as I touched on earlier, maintains a customer's sense of control throughout. In the case of automated payments, for example, it's less of a situation where the customer may not understand what's specifically happening, but more that throughout the process, there are areas where a customer's input or ability to, like I said, control the situation is useful. There are examples that we have in our qualitative research with our customers where a payment coming out at the wrong time caused an overdraft fee, and it was based not on a customer's misunderstanding about how autopay works or when it's intended to come out, but really about just the inability to shift something when external circumstances need it. So, I think you can take that lesson and extend it beyond simply that. I don't, it's not about the automated walkthrough, the understanding. It really is about maintaining that sense of control throughout the process.
Gotcha. So how can banks become better aware overall of what customers want or need in order to provide the best service and experience possible to them? This may sound really simple and obvious, and it is, but it's important to kind of state it. You talk to them, you listen to them. Obviously qualitative feedback needs a layer of interpretation. There's, the classic Henry Ford. If I ask people what they'd want, they tell me faster horses. And I think that's often used as an excuse to not ask customers what they want. But what it really means is you need to ask them what they want and then spend the time, do the hard work of interpreting that and finding better ways to solve their problems than even they can imagine. So it needs that layer of interpretation, but it is tempting sometimes, and I see this a lot, to think that we know better what customers want than they do. And that's really, really often not the case at all, especially with something as personal as money. When you talk to customers and when you listen to them, you learn pretty quickly what works for folks and what doesn't. Understandable. So how can financial institutions better harness online customer data and the experience data while adhering to privacy standards so that they can level up their services in that way?
Oh man, good question. That's, kind of going back to it, you really need what you're saying, the what and the why, right? The why goes back to talking to customers. Without that layer of understanding, the what is not going to give you the whole picture. There's not much privacy consideration in asking people how they feel and what they want. So, that's a pretty simple answer there. But for the what, I should preface this by saying I'm not a privacy lawyer. I work within the bounds that I understand, and we spend a lot of time on diligence in that regard. But you really can get a lot of the usage, the product usage analytics data in ways that are not intrusive to the customer and don't compromise their privacy in any way. Aggregate data. And really, you need to eat, sleep, and breathe that stuff, right? It's things like conversion rates. It's things like time on task. And these are all aggregate numbers so that you understand things, the trends. It's how long does it take to accomplish something? These sources of friction. You need to layer those in with the qualitative data you have to get the full picture of what customers are experiencing, so that like I said, then you can do the hard work of looking for ways to ease their pain, fix the things they struggle with, and then maybe find real opportunities to improve their lives.
Got it. So there's a lot of newer technology emerging on the market. I know AI is a big topic these days, machine learning. How can businesses incorporate this, especially in the banking and financial sectors? How can they incorporate this emerging technology for leveling up and improving the online customer experience?
I think it goes back to almost everything that we've just talked about. It really is understanding fundamentally customer needs. When I think about the technology and the automation and really the leverage that we talk about that is provided by those things, they're in service of something. What are they in service of? They're in service of providing customer value. I mean, that's how we get business value. It really is. That's the direction. We're building things for customers. We're building things to solve their problems. And so, technology is just a tool. I know that's sort of a truism. It's a little bit of a cliche, but it's just a tool to solving problems. And I think from my seat, the best way that other institutions or that anybody can really leverage this technology is with a deep, deep, deep understanding of what customers' needs and expectations are, and a real commitment to meeting those needs and exceeding those expectations.
So in the end, no matter how much tools or technologies or automation, efficiency, it really comes down to building those deep, meaningful relationships on the human level.
Absolutely. And, that comes back a little bit to that sense of control as well. Why is the humanity of the approach important? Why do we want to maintain that? It's because people, we're wired to understand how to interact with other people. We're less wired to understand how to interact with, a database directly, or even a highly advanced language learning model, right? Like these are not things that provide us that sense of control and affirmation on our decisions that a real human interaction does. And so it's really important to within these tools, within these solutions, keep an eye on the human side of things, so that again, we're solving customers' problems in a way that provides them that sense of control.
I have one last question. I've noticed several banks that have either completely failed recently, and I've noticed some banks that have closed their brick and mortar stores or are on the track to close their brick and mortar stores and be completely online. So what are your thoughts about, in the next 5-10 years, are we going to see, is this an industry that's going to be predominantly online, or where do you think we stand?
Yeah, I can't predict the future. I think I can just look at trends and see where things are going. And again, I'm a little bit biased with my perspective on being a digital user experience professional. But I do believe that the trend is one in which things become increasingly online. We spend more and more of our time online. That was obviously accelerated during the pandemic. And that's kind of pulled back a little bit. You see sort of a more kind of cultural desire to be in the same place as other humans post-pandemic. But I don't think that trend is going to really reverse anytime soon. And so, I think the digital experience, being digitally based, provides a ton of advantages in terms of leverage, in terms of the ability to apply this automation and this technology that we've been talking about. But I think there's always going to be a place for brick and mortar financial institutions. There's I think it was like a 2020 study, not the show, the year, a study in 2020 by Cornerstone Advisors on Americans' shadow financial lives. It was really seeking to understand the rise of challenger banks at the time. And one of the questions they asked was, why do you have more than one checking account? This is one of the questions they asked their folks. I don't remember the numbers off the top of my head, but the number one reason that people stated in that study was closer bank branches. So I think there's always going to be a role for brick and mortar. There's always going to be a desire for human interaction. Even as our technological approaches and our automated approaches, feel more human, people are really going to still have a desire to look somebody in the eye to make financial decisions. So there's always going to be a role. Will it be reduced? Likely, because that's just the overall trend, but it's still going to be there.
Makes sense. I want to thank you, Shane, for coming on today and sharing your insights to this industry.
It has been absolutely my pleasure. Thank you.
And I look forward to speaking with you again in the future. And to our audience, stay tuned for more Digital CxO interviews.